Hello, and welcome to another update video about ADA. On the daily chart here, we are still tracking a potential triangle pattern. I've shown that here by highlighting these trend lines. Trend lines aren't so important. It's more important that we are filling in the proper Elliott wave pattern. So I've highlighted here a potential wave 4 that could still be in the making as a triangle pattern. You will see the microstructure on the shorter time frame. We will take a look at that in a minute. Here on the larger time frame, what you can see is that as long as we are holding above the two red lines here, these are the two main levels that I'm watching right now. The focus is on higher prices, whether that is the diagonal structure I'm tracking in the yellow count or the triangle pattern where this wave 4 that in the yellow count presumably bottomed early in February is still unfolding. That doesn't really matter so much because these key levels are the invalidation points. Basically, the upper one is where probabilities shift here at around 58 cents already. And the lower one, I should rather show it as solid line, that's really an invalidation line because that is at 51 cents when the triangle will be invalidated, but also the diagonal pattern to the upside will be invalidated. So really, whatever the market does, it needs to hold above that 51 cent level to keep the overall upside scenario alive. And it could, what this wave count tells us, I mean, I can zoom in a little bit, but what this wave count tells us is that first of all, should we break out to the upside, the next upside levels to watch are $1.42, but that's really only the last high from December. $1.72, $2.36, and $2.95. These are the next upside levels to watch. It also tells us that we're currently holding above these invalidation levels, and especially here above the 51 cent level. It also tells us that if this is a triangle, it might extend a little further. We have not broken out yet, so we might need a little bit more patience. And so essentially, this is a range right now, pretty boring range. A lot of coins are currently moving in sideways ranges within triangles, okay? So please be aware of that. And overall, the idea is still that we could push higher and that we should get to 142, 172, possibly over the coming weeks and months. Yeah, I will change my view below 51 cents because below 51 cents and probably already below 58, but the 51 cent level is critical. Below that level, it will indicate that we are approaching or going to get to the, going to test the October, September, August lows again before we turn around, okay? That would be an alternative extension, an alternative wave count, an extension of the larger correction. Yeah, that presumably already bottomed in August, but okay, in the alternative scenario, I have to assume at least we have to have a plan. What happens if this plays out? Yeah, alternative scenario, we could test that lower box there, easy. Now let's take a look at the shorter time frame. Here you can see that diagonal pattern I just explained, where the price could take us to 172 plus in the yellow scenario. Whereas in the white count, we have this triangle pattern. Let me explain the difference. Triangle pattern, started in December with an A wave down. We had a B wave up. It's all corrective, 3 wave structures. Then we had the C wave down. We're now likely in the D wave and then could get an E wave and then move up. So this would be a sequence of lower highs and higher lows. And in this scenario, the C wave might even be complete. It's not high confidence though, but as long as this really the micro level here at 64 cents is holding, assumption is, at least the thesis is, and it's not high confidence, but that a D wave might be unfolding, and that would be an ABC structure to the upside that could take us into the region between 88.5 cents and $1.08. Yeah, this is what I am watching here for the D wave, and then we could get an E wave as a higher low before we break out. So that is an ideal target zone, but honestly, the price hasn't really given me a lot of reasons to believe that this D wave has started. So it's more like a very weak sideways consolidation I am tracking there right now. What it needs to confirm that further is a break above the green line here at around 75.5 cents. Obviously, that hasn't happened yet. That would need to happen next to confirm further that we are on our way higher, potentially in this D wave with a blue target zone there, right? And then, yeah, as I said, we can get an E wave down and a breakout. But it takes a little trigger here small trigger to confirm that we are starting to move up. And it's only consolidation at the moment. Yesterday I put here on the chart these trend lines. Looks like a bearish pennant even. Therefore, I would not be surprised if that C wave of the triangle is actually still unfolding. And that is where that invalidation point comes into play at 51 cents. That level really must hold to keep this triangle pattern alive. But what I can tell you is that if we break below that 64-cent level here, that upper red line, 64.5, it would extend the triangle. It would increase probably the time that we're going to spend in this sideways consolidation. So yeah, that's pretty much it about ADA. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, I invite you to join us here on X for further updates. There'll be another exclusive video update on X today. A lot of you are or have asked for certain coins to be covered, and some of these are published only on X. So if you don't want to miss any videos, make sure you follow us here as well. The link is in the description. Thank you very much. Bye-bye.